Tonight, we will be hosting a worth and wealth seminar on home buying, hosted by Leslie Torres Arias of Citizens Bank. So before we get started, I just want to read a disclosure. This is a Zoom meeting that will be recorded. The recording may be uploaded to a public website for future use. Please note that the chat record is subject to public record and such may be anonymous. And so I am at this moment going to put the chat into the attendance link into the chat, and I will turn it over to Leslie to introduce herself.
Great. Hi, good evening, everybody. Congratulations on taking the step on getting more information in regards on how to go about in purchasing your home.
Awesome, Leslie. You can share your screen now.
Great. All right. So hello, everybody. Again, Leslie Torres Arias with Citizens Bank. I've been in the mortgage industry and working in this career and profession for over 20 years. It's absolutely a pleasure to be able to help first-time homebuyers, especially, get themselves into their home. So we're going to go over this general presentation. If you have any questions, please feel free. Put in your comments in chat or lift your hands up so we can see, and feel free to ask that question. So let's start with the homeownership one-on-one. So today's session, we're going to be talking in regards to mortgage and first-time home buyers. As a first-time home buyer, one would ask, right? Where do I start? Or how do I get a mortgage? And, what are my best options? Am I in a financial ability or situation to take the next step into home buying? Well, just keep in mind, everybody, if you're paying rent, you're actually paying 100% of interest rate when it comes to rent. So if you're paying rent, 100% versus, 7, even 8% is much better. But let's carry on. The benefits of owning your home. I mean, for one, is having your own space, having, a backyard, having pets, being able to decorate and having your privacy. And having that home ownership pride of that's yours, and something that maybe you can save and set and have for your next generation in your family. Let's go over with some terms of mortgages. But before that, I wanted to just talk real quick in regards in if it's the right time for buying a house. For you as an individual, and not because of the market, not because of your friends and families telling you to do it, but if it's you for you, as an individual. I mean, there's our advantages and disadvantages of home ownership. The advantages definitely go over. For instance, the property value will increase over the time. So eventually that, monthly payment you're paying is going towards a principal, which you might have access to the equity and those funds in the future to refinance, to cash out, to do repairs on the home, to do other investments. Unlike rent that you pay today and that's all you get is 30 days worth of living in that unit. A home is something you pay within through time, and eventually you'll gain some equity that you can then tap into. There's also potential tax benefits for it, in which you definitely want to talk to your accountant about. And the no restrictions, the having the control of your living space, your decor, the sense of community, the stability, the security of saying, I'm going home, my house, my kids are in the backyard, I have a dog, I have a cat and a bird, and whatever I want. That control and that ability to have is definitely something that is an advantage. Also, the degree of control of overall housing costs. Rents at any time can pretty much go up. So your landlord can say, hey, since, come 30 days, I'm going to increase your rent for so much. Again, being in a 30-year fixed rate mortgage, you at least know that you have a mortgage payment, and that will vary because we know that taxes and insurance do change. But nevertheless, it's not something that they're not going to tell you have to move out in 30 days, or B, I'm going to increase the rent for X amount of dollars. And then you have your disadvantages as also as a homeowner. I mean, we have a larger initial financial investment. There's going to be cost in the move. And also you're going to be the person responsible for all the repairs and the maintenance, and responsible for the property taxes. And the value of the home could remain flat or even go down at times. But they know throughout history that the property values do increase. So let's go over through some mortgage terms. So we have adjustable mortgage rates. Those are rates, that's a mortgage that, it's not a bad mortgage, but it's not, I wouldn't say I would recommend it for any first-time home buyer. The 30-year fix is definitely something you want to go, and not only that, but most of the programs for first-time home buyers and grants and anything that we in programs can help first-time home buyers will be a 30-year fix. Most the bigger chance of it. Right now, even with the rates being a little higher, I'm still for the 30-year fix. Especially again for first-time home buyers, programs only allow a 30-year fix most of the time for first-time home buyer programs. So it's something that the adjustable rates are not bad. It's just how you use them. For instance, an adjustable rate could be somebody who knows that they're only going to be living at a certain place for just so long, and they're going to get relocated, or vice or something, or they're looking to just live there temporary, and in 5 years they'll be moving out. So, or an investor who knows who's going to buy it, fix it, live in it maybe a year or two and sell it. So those are the mortgage is not bad. It's just, what do you need it for? So, and let's discuss the annual percent rate versus your interest rate. Your interest rate is the rate that you're going to be paying on the mortgage, on the principal of the loan. And your percentage rate, the APR rate, is the rate that's going to be associated with the cost of the overall doing the loan. Your appraisal. Your appraisal is something very important, because that is the actual report that an inspector or a contractor who goes to the house and does an inspection, but it's mostly in regards to the value of the property, anything visual. The appraiser is not the inspector, the home inspector, so do not get that confused. The appraisal is to confirm and verify the value of the property itself. As a seller, one will want to sell it as high as possible, but at the end of the day, the bank is also making sure that the value is there, which protects you as the consumer and also the bank. The bank will never lend anything that does not appraise. So for instance, if you have a sales price of $500,000 and the appraised value came in at $490,000, we will only lend, any lender will only lend up to the sales price of $490,000. So it'll be the lower of the two. So vice versa, if the sales price is at $490,000 and the value came in at $5,000, we're in a good space, because we're going with the lower of the two, which it would be the contracted sales price, which would be lower than what the value itself is. We have closing costs. Closing costs tends to be about 3 to 5% of the sales price. And that's typically going to include the cost of the originating of the loan itself, your title fees, your escrows, which we'll discuss in the next couple blocks here, and any cost that you need for closing. The fixed rate mortgage is definitely something you want to look into, especially being a first-time home buyer. Even in today's market, the 30-year fix is really good compared to an adjustable rate that could be only good for 4 or 5 years, 7 years. And again, like I mentioned, being first-time home buyers, most of the programs do only come in as with 30-year fix, that it's not an option of selecting an adjustable rate. Reasons for it, in most recent years, the rates have been coming down. And not only that, it's a more secure 30-year fix versus that we don't know what's going to happen come whatever term comes to that rate to adjust. So you're safer in a 30-year fix, making sure you do qualify at that rate rather than in what you don't know what's going to be coming in the future. Your escrow. Well, escrows are a part of your closing costs, and it's also is an account that we hold as a lender to include your payments of your real estate taxes and your home insurance. So in your closing costs, you're going to have a section of prepays, which will include your escrows. And that's going to be covering whatever your whole full year of insurance must be paid in full at day of closing. So that's going to be part of your escrow. We're going to collect the whole year, perhaps maybe 2 months. This way, you come next year when your insurance gets renewed, we have sufficient money in that account. So we, as the lender, can send out the payment. Same goes with real estate taxes. Real estate taxes, depending on where you are in the state, they get paid every 3 months. The bank then collects maybe 3 to 4 months at advance at closing. So we have sufficient funds to go ahead and send that payment to the city or town. The bank will receive tax information and homeowners insurance information, so we can send out the payments. You as a consumer will also receive it. I would also recommend you to open it, review it, and make sure everything is done and it's all correct. The home buying process. Start your journey off on the right foot, right? Let's get familiar with the overall home buying process. Let's start with these 9 steps. Number 1, let's set that budget. Let's look at our monthly debt. Let's look at our monthly income and decide how much of a mortgage payment you could afford alongside your other expenses. Keep in mind, when we do qualify the consumer to purchase for a mortgage, we will use the income prior to taxes being deducted. And we're also not using any monthly payments as cell phones, gyms, insurances for cars, or any other expenses that are typically not on your credit report. We will not deduct that from your gross income. So keep that in mind. So that budget is extremely, extremely powerful, and it's going to help you guide you and know what you could afford after all said and done. You got to determine your down payment. Make sure you talk to that lender to see what's the best percentage to put down on a home. Depending on the program, you can put down even 0% if you were a veteran, and we can do a VA loan, or we can do, depending on a first-time home buyer program, that will require the borrower to put only 1.5%, and the rest can come from a grant or a city or another city grant or a state grant that might be existing that we could then combine and use to cover the initial full down payment. Perhaps the down payment in total is 3%. And out of the 3%, half of it, which is 1.5%, would have to be from the borrower, the consumer who is on the application, has to have in their account in order to use as a down payment. And that, again, is a conversation you're going to have with your lender. What type of property you're going to buy is also going to vary on your down payment. Is it going to be a condo? Would it be a single family, a 2-family, a 3-family, a 4-unit? Those types would vary. The multifamilies will require a little more of a down payment. Now, one thing too that you should be very aware of is your credit and your credit score. Where do you stand? What's your credit score? What's your credit history? Is it in good space? As a consumer, you have the right to review credit every year, and it's for free. You can order it. And you can review it to make sure there's any errors. So if you see that there, definitely check your credit before you decide to go ahead and have a lender pull your credit directly. You want to make sure that there's no errors, and you want to make sure everything is correct. So once we have your credit checked and we have determined what type of property and we've set your budget, then we're going to go to the next step, and that's getting that pre-approval letter. So you're able to go shopping with confidence and knowing that, all right, they've reviewed most of my documentation, and not only that you can go out shopping, but the sellers, the ones that you want to buy, understand and see that you are pre-qualified already and you've done your due diligence to show that you are interested and that you are serious in purchasing. So definitely, this pre-approval letter in hand, it's going to put you way ahead of all the game. And in fact, with this market being with such shortage in inventory, without a pre-approval, you're not going to be able to put in an offer. So it's definitely something you're definitely going to need. Then once you get that pre-approval in hand, now it's the fun times. You get to go shopping, get to look around, meet up with a real estate agent, have them start searching for you, and have the fun of exploring and learning what you do like and what you don't want. And once you find that what you do want and you put in an offer, the offer is when you look at a property and you really like it, you put in an offer in it, and if the seller agrees to what you're offering, off we go to an accepted offer. And then we want to look into what it is, a home inspection. Like I mentioned in the previous screen, not to confuse appraisal with your home inspection. Hire a qualified professional, a home inspector, to evaluate the home's structure. It's very, very important. And I understand that in this market, a lot of agents and a lot of people are waiving the right of a home inspection. And I get it and I understand. But at the long run, please keep in mind, you're the one responsible for the maintenance of this property. And this loan is for 30 years. So you definitely want to make sure you know what you're getting into. Even if you have to do a home inspection just for your information so you can get the accepted offer, maybe it's something you should discuss with your attorney or your real estate agent to help you put in that into your offer, that you do want to do a home inspection, but strictly just for your own information. But again, that's something you want to consider, talk to with your attorney and your real estate agent to help you with that offer. Once your offer is accepted, you're good with the home inspection or good with the property, how it is. Then we want to go ahead and submit the full application with a contract, with that purchase and sales, and start the true process of verification for a mortgage. So that's when the lender starts the process, and the initial disclosures will go out, and you'll have the right to review and acknowledge everything. And then once we're in that process will take about 30 to 45 days, depending on the program. And depending how prepared you are, the more prepared you are, the quicker the process can go through. Then once we apply for that mortgage, then we're good. Now it's time for closing, and now you're in your new home. You do your walkthrough, the paperwork of your broker and the attorney and the lawyers. And once you sign, your home is officially yours. You're responsible. You're the homeowner. How to prepare, for a buying of a home. The saving of a down payment is always something very important. Depending on the program that you qualify or you select, could be a down payment of 0, like I mentioned, for a veteran, or it could be down a payment as low as 3% or even 20%. Depends on how we're going to structure your loan and what are the programs you're applying and you qualify for. But there's many programs out there, especially for first-time home buyers, with minimum down payment. Here at Citizens, we offer what we call the Home Ready program. That's a down payment with a minimum down payment of just 3%. It is for a primary residence, and it's for a single family right now. There is flexible underwriting, reduced mortgage insurance, gifts are acceptable, and it is competitive when it comes to the interest rates. And we also offer another nifty little portfolio loan that we have here at Citizens, which is our Destination Home Mortgage Program. That too comes with a low payment requirement, low as 3% of the purchase price, no mortgage insurance, no income limits when you're buying in a low to moderate census tract area. And depending on the location where you're purchasing, we may be able to even offer you a closing cost credit. When you're preparing to buy your home, like we mentioned, we have to go through and see your credit score. Depending on your program, credit scores, the minimum credit score could be as low as 620. But mostly credit scores for first-time home buyer programs are a minimum of 640 or 660 for multifamily. Like I mentioned in the screen before, as a consumer, you have a right to receive a free copy of your credit report from all 3 bureaus. You can review it, you can dispute it, you can then confirm that everything that is being reported is correct. The better credit you have, the better opportunity you will have in the mortgage. Again, credit is extremely important. It demonstrates how one takes care of their monthly payments and makes sure that one is able to and has been responsible with it. So you can research your neighborhood once you get pre-approval and you start looking around. You can consider different factors that might impact the quality of life, such as, you know, public transportation, the length of commute, the school system, the crime rate, development, you know, future development projects. These are all things that you can look up right on this website if you wanted to. And again, your real estate agent is going to be a great help with this as well. Does anybody have any questions?
Yes, we have one in the chat.
Sure.
From Esther Archer. My inclination is to hire a home inspector, even if the property was newly built. Would you agree?
I would. Again. I would definitely do, again, as I mentioned, I know that in this market, a lot of people have been advised to waive that home inspection so the seller can accept your offer. I understand, I get it, but keep in mind that you're the one responsible for this property for the next 30 years. So you definitely want to make sure that you have a little information on overall condition of it. You can put in part of your offer as, yes, you'll do a home inspection, but strictly for your own information. So once we, you know, have our properties, and I know we love to know information in regards to refinancing. Well, this is the benefit of owning a home, that in the future, once you're paying towards your mortgage and paying down that principal, you're going to have equity, and you're going to have maybe a means to take out some cash to maybe do some repairs to the property or do other investments or purchase another property. You might be able to refinance into a lower rate. We're in a market right now that if you were to purchase now at a higher rate in the future, it might be to your advantage to refinance to lower that interest rate, or even to change that loan type. Maybe you weren't able to get into the first-time home buyer programs and didn't get the best option, and now was paying a little higher on mortgage insurance and interest rate, and might be for your advantage to go ahead and refinance to lower that interest rate, to change that type of loan, to remove maybe that mortgage insurance. But before we can get into refinancing, we definitely want to make sure we have a home and build that equity so we can have these options. So now I'm going to open it up to our participants here. I know I said a lot, and I definitely sure that some people have questions. Please feel free, if you don't want to ask, you can put it right into the chat and we can then discuss it. But here in the state of Massachusetts, we do offer, and we're part of what is also called the One Mortgage, the Mass Housing Partnership, which is an excellent program as well. That is something you definitely want to look into if you are looking to purchase in Massachusetts. It is a great first-time home buyer program. There are guidelines, like every mortgage loan programs, that you would have to qualify, including income and household members. But it is for your advantage to go ahead and get information in regards to all these first-time homebuyer programs that are out there with discounted interest rates. The One Plus Boston right now is giving a tremendous discount. You have to be a Boston resident or work at Boston and qualify for that one mortgage to get into that program, but it's fantastic. A lot of cities throughout the state also offer grants to help down payment assistance, or closing cost assistance. The more information, the more power you're going to have and advantage that you can take advantage of, and means that you'll be able to get into. For instance, there's matching saving programs out in the state of Massachusetts that are offered through the nonprofit agencies to help you with that down payment or to help you with that closing cost. So definitely take it, look into signing up with one of the first-time homebuyers through chapa.org. That way you can get a certified first-time homebuyer certificate, and you can use that towards, so when you do apply, that's going to be one of your requirements. This is good information, but I definitely would recommend you to take the full first-time homebuyer program and take advantage of the one-on-one counselings that they offer, and the different information that they will be offering us as well. So there's some programs out there. Yeah, I think I can do that. Chris, is that something I'll be able to in regards to some non-profit agencies like MAHA that you should look into? In fact, if you can go to CHAPA, CHAPA, I'm going to put it in the chat.org. That way there's a list of all the approved first-time homebuyer programs in agencies, and within those agencies, they have different programs that they can offer their participants. So don't be afraid, don't hold back. Go ahead and, dig right in and call, review, look up online. There's a lot of programs out there for first-time home buyers. Take advantage of it. Great thing is that you're taking this class right now, listening into this presentation, so you're a step ahead. See, interest rates do vary depending on credit sometimes, but sometimes it could be just strictly on the mortgage program. For instance, like the one that I was mentioning, the one mortgage that I'm going to put in the chat here. The one mortgage, which is with MHP, that rate is given to everybody the same rate. The rate's given, say if you lock in today's rate, for instance, was at 6.875. That rate would be for everybody in all types of properties up to a 3-family to a condominium will receive that rate if they were to qualify and lock into it. So I know that everybody's hoping that the rates come down because they're afraid that the rates are too high. But what's going to happen, because there's somewhat of a shortage in inventory, I don't see construction being created so quickly to offset that shortage and the gap that we have right now, that we have a lack of inventory properties available to purchase. So what's going to happen is once the interest rates drop again, chances are everybody else is going to go back into the market and it's going to be more competitive. So keep that in mind. And again, don't go with any pressure. You're the one held responsible for this 30-year loan. And it's chances are you're going to be owing at least $500,000, which is $500,000. It's not something easy. It's something you have to be really sure that you're going to get into and feel comfortable about it. So do not fall under the pressure from any, friends, family, or real estate, or whatnot have you. When it's your time, it's your time. So the best thing is to get prepared. The less you owe, the more you qualify. The better credit you have, the easier is for us to offer you something, because we see that you're responsible and been able to carry that out. We'll also want to see your work history. Have you been stable with your employer for the last 2 years at the very minimum? Do you have savings? Do you know how to manage yourself? We don't want to see a bank statement and see a lot of see any overdraft. And if there is, life happens, and we can probably explain those. But those are things that you got to keep in mind, that we're looking to lend. And we're going to be looking at your tax returns. We're going to be looking at your bank statements, your pay stubs, and we want to see some stability with employment, some stability with your credit and responsibility. So it's definitely something that the more education, the more information you get, the better this whole process is going to be. And it could be frustrating at first. One could be like, oh my goodness, they're going to keep asking for paperwork. But once you're done and in your home, you'll be so happy and relieved. So let's see. Multifamilies also, yeah, the one mortgage will help you also to purchase multifamilies. And here in the state of Massachusetts, Mass Housing is another great program that you can also take advantage of. You also have some government loans. Like I mentioned, we have the VA loan, which is a veteran loan. It's at 0%. You can offer also another government loan, which is your FHA, and that can go all the way up to a 4-unit with just a minimum down payment of 3.5%, which it all can be a family gift. Your down payment. There are requirements that and guidelines that you will have to fulfill. For instance, if it's a 3-family, you will need to have at least 3 months of reserves of that monthly payment of your own funds. But the down payment and the closing costs can be all gifted or from a grant. So when I mentioned for consumers has the right to go ahead and request the credit scores. You can do it right through these agencies, the bureaus, credit bureaus. You have Experian, you have Equifax, and you have TransUnion. You as a consumer have a right of your report, not your credit score, but on your credit report, and in your credit report, you're going to see all your accounts, your history, your payment history. So if it looks good, chances are your credit score is going to be good. You also do have the option to purchase into getting credit scores, or once you go into these nonprofits and join a nonprofit and work with them, they also offer what's called a soft pull, which can be considered as in hard inquiry, as when you decide to go apply with a lender. Once you pull your credit, it's considered a hard inquiry. And as a consumer, you have a right to compare other lenders, but your right is only within 30 days, within that month, so you can compare other lenders and won't affect your credit score. It would just simply look like one credit score was one credit hit. That way you are not held, you have the right as a consumer to compare. But that said, you want to do that all within 30 days. You don't want to go ahead, start doing it now, and then in 3 months again, and another 4 months. That way, every time you get your credit pulled, that is considered a hard inquiry. And keep in mind that pre-approvals are only good for about 90 days. So that's also something you have to keep in mind. Depending on the bank, they might have to reissue your credit after 90 days to give you an updated credit report. So that said, you want to make sure that you're not doing any, out of norm transactions. You don't want to be pulling new credits. You don't want to add more debt. So that is something, again, the less you owe, the more you're going to qualify. The better credit you have, the more we can offer you as for different programs. And keep in mind that we might have to pull credit again after 90 days, because then your credit will expire. So Esther's saying here, quick questions. Are there any typical penalties assessed if the mortgager decides to pay off their mortgage early? Nope. No, only if it's your first mortgage here in the state of Massachusetts, there's no prepayment penalty. You can buy today and go ahead and sell tomorrow. And for the mortgage, there's no prepayment penalty. Mind you, if you have a grant, they might be, or a city, or you might be getting a grant from the city, they might be some, silent second that was part of your grant, and you might have to pay back since you didn't live the full term of maybe 5 years as required, or maybe even 10 years. So it all depends on what the terms and conditions are of that grant. You're very welcome. Okay. So again, just to quickly go through the 9 steps again, because I did go through this presentation pretty fast and not so many questions. But let's go about it again. Budget. Know what you can afford, what you're paying. Figure out what you're going to need for a down payment. What do you have for savings? How can you get it? What are the means? Check your credit score. Make sure your credit is at least at the bare minimum of the 620. You definitely want it to be higher if you wanted to get into the first-time home buyer programs. You as a consumer have a right, if there's any information that's not accurate, you can go ahead and correct it. And that is why you should definitely do that before applying for a mortgage. You want to make sure that there's no errors. You don't want to delay that pre-approval process. Once you know the credit's good, you go ahead, you do your shopping with your lender, you decide your lender, you go ahead and apply with your lender. Lender gives you a pre-approval, and then you're off with your real estate agent to go looking for that home. Once you find that home, you go ahead and you put in that offer. They accept that offer. Then you can go ahead and do a home inspection or whatever you decide to do. And then once you're pretty solid on moving forward with this, then we go into the full-blown mortgage application, which would is the whole processing of the loan application and releasing of the disclosure, so you know what you're getting into, your terms and conditions of your loan. And then once all that's said and done, and the process takes about 30 to 45 days, verification of employment, verification of your assets, the appraisal, making sure that the property does appraise to what the sales price is at the minimum, making sure you have everything in line, so we can go ahead and get that loan cleared. And then once that loan is cleared, we can go ahead, you do your walkthrough, you agree to what the condition of the property is, and you sign your closing documents with your attorney, with your lawyer, with your real estate agents, and there you go. You're officially a homeowner then. Questions? There's definitely more benefits in owning a home than it is a disadvantage. Strictly, I mean, down to just even having a backyard or having a pet. Privacy, your decor, whatever you like, whoever you want in your home without having restriction. That said, that you will have no restriction, but you're also held fully responsible in the maintenance of the property. So as a single family, as a homeowner, you know, something happens, you might be able to hold off, but keep in mind, if you're buying into a multifamily, tenants will be calling you, and you as the homeowner are the one held responsible. So if something happens in the middle of the night, plumbing happens, you know, an issue in plumbing, you're going to have to figure it out, because you can't leave your tenants like that. You're held responsible for the conditions of the property. Questions? These are the two programs that we offer. One of the two. We have many other programs for first-time home buyers, like the one I mentioned, the one mortgage with MHP. There's other lenders that also offer the the Mass Housing, which is another great program here in the state of Massachusetts with very low interest rates, minimum down payment, no PMI or very little PMI. Again, the more information you can get, the better prepared you're going to be, the more comfortable it's going to be for you, the easier it is, and the smoother the process is going to go. So Sophie, Carrie, tell me, we have any other questions?
No, no other questions now. This is Michael. Yeah, no other questions now. If anyone has any other questions, feel free to throw them in the chat. Give them another minute or two, and then I think we can wrap up.
Definitely. I know it's a lot of information, and I congratulate every single one of you to being on this call right now, because it is a great thing to taking that next step and go into home ownership. I wish you all the very best in your journey, but the better prepared, the more educated you are, the better and smoother this process is going to be. I promise you.
And we just got a question from Esther. Some communities have a HOA and charge an association fee if you are not in a condo unit. What is this used for? Is it for security?
It all depends. It all depends. I'm not sure, maybe if it's a pub or a different type of property type that will require a homeowners association and it's not in a condo unit. It could include security, it could include maintenance, it could include master insurance. So depending on the property itself, I'm not 100% what it would cover. But mostly the homeowners association is to it could be security, maintenance, insurance.
Well, thank you, Leslie. This was a great presentation. I know I've learned a lot. I'm sure everyone on the call has. If anyone has any questions, you can always follow up with our office or Leslie directly. And we can give you, and we can, our office can also share Leslie's contact information with you as well. So thank you, Leslie. Thank you for everyone for joining the call. And I hope you all enjoy the rest of your night.
Well, thank you so much, everybody. Everybody have a great evening and good luck in this journey. Take care.